Hear me now? Y'all can hear me now? Awesome. Let me know. Okay. My bad. Um, okay, sounds good. I was just saying, I hope you guys had a great weekend. It's always good to take some time off and with the family, right? Remember, we trade for freedom. So always study on the weekend, but it's always good to kind of sit back and relax a little bit as well, not overthink too much. So with that being said, let's get our pre-market watch list started. First of all, I'm watching SPCB, right? So the reason for that, I was just mentioning it in chat as well. And we hit from right around 29 cents to 33. I said that was my PT if 29 cents holds. Now, why was I watching this? Okay, so if you guys saw the thread last night on Twitter or just the recent YouTube videos, right? My strategy is very simple. I look for either sellers being trapped, where are sellers trapped, or where are buyers trapped, right? That's what we look for. So you guys can see right here on SPCB, a lot of volume, a lot of selling pressure, right? And then we make that move down. So that's what? Supply zone, right? We have sellers here. Once we break over it, now I'm watching for this level where we had previous sellers flip into new support, right? So old sellers with a lot of volume, right? I now want to see this area flip into support. So we've already broken out. Now any single retest or any line below this is probably going to be a liquidity grab to actually retest 28, right? This line and make that move up. Okay. So that's why my price target was right around 33 cents, because this was from one selling area flipping into support to the next selling area. Does that make sense? You guys still can't hear me? Okay, you can? Okay, perfect. Perfect, awesome. Okay, so yeah, SPCB, you guys can see that we have a lot of selling pressure here. Okay, and then now we flip into support right here at 28 and target the next level. So from a long position, if we do take a 28-cent entry, our risk would be probably below this recent low, right? So we're going to take an entry at 28 as soon as we make this line actually clean support. And then we're going to risk this recent low at 27 and right around 27. All right, our price target is 33 cents. So that right there in pre-market, before the market even opens, is almost a 1 to 4, 1 to 375 risk-reward ratio. So does that sound like a good trade to you guys? Let me know. Does that sound like a nice trade? From a risk perspective, is that a good trade? That's probably one of the best trades you get in pre-market, right? Now, most traders will start to watch a stock at this level. They would be like, oh my gosh, it's breaking out. Let's buy the breakout, right? They're watching it now for the breakout. And you're instantly in drawdown once you're buying the breakout. It comes down here. It probably is going to hit your stop loss right here because you don't know what's going to happen. We're like, oh shit, this is what happens. This is what this wick is. All the stop losses get hit. That's why it's necessary, if you actually want to hold your trades long enough for the full potential, that you don't buy breakouts and you buy dips, right? But buying dips doesn't always work. So you have to know which dips to buy, right? That's why I'm explaining that we have selling pressure here. We look for this selling demand supply zone to flip into demand and then make that move, right? So you don't just buy any dip. You don't just buy any breakout. You need to be smart with your money. You need to be A+ setup set. I'm only going to put my money where it's a high probability trade, with actually a high probability of making money, rather than just, oh, I see it running and I think it's going to go. It might go, right? We use our intuition. We tend to use our intuition a lot rather than actually using a real strategy, and that's why traders are not profitable, right? But now as you become profitable, you start to get a better intuition in which you can start to rely on a little bit more. Anyway, so for SPCB, I'm looking for a pullback next level into this. We've already made this whole area support now, right? So the next area we want to see sellers get trapped is this kind of this wick right here, okay? That's what we're looking at. We've already made this support wick. We've already made this, wick support. Now we're going to look for pullbacks kind of into this area again, into open. Where's the drawing tool? Right here. We're going to look for like a dip into here and then breakout. Okay. And one thing I like about this right here is that we failed to make a new high. We failed to make a new high. Now, what does that mean? Can anyone tell me what that means? If we don't make a new high and we make a low, what does this mean right here? Can anyone tell me what this market structure means? I'll wait like 10 seconds. What does this mean? All right, so this right here is a inverse head and shoulders pattern. Okay, inverse head and shoulders pattern. A head and shoulders pattern is like this, right? So we have a head, or we have a shoulder, we have a head, and we have a shoulder. This is inversed, okay? This is inversed. Now I'm about to teach y'all something where most people will not, or maybe you might not know this, okay? So we have the concept behind an inverse head and shoulders is that, okay, we have an initial low, we break below the low, grab liquidity, right? Grab all the stop losses, just like up here, they're grabbing stop losses, right? For the breakout traders, right here, they're grabbing stop losses under this low, but we never know that. So that's why you wait for the inverse head and shoulders pattern to form. So we have a low, we break below, grab liquidity, hit all the stop losses, right? And reclaim this level. And that's when you take your safest entry all the way back up to high day. When you hit stop losses, this is fresh liquidity. Does that make sense? So most traders would have stopped out under here. But that's why you wait for liquidity. You wait for A+ setups. Now, everyone who stopped out here is scared to take a trade here, but that's when smart money is entering. That's when I'm entering. That's when my team is entering with me, okay? So that's when we enter and we ride it up to high day. Now, what happens here? We grab liquidity here. So what happens now? We need to grab liquidity up here. Market makers needs to break this high and grab stop losses, okay? They want to do that because market only moves on liquidity. It's not like market makers can just press buy and sell. It doesn't work like that. They have to stop people out to make money. They make money off the spreads, okay? So they're going to look for, eventually, it's a double top, right? We have not broken over high of day. We have not broken this high, okay? So that means there's still leftover liquidity over this highs. That means there's buy stop orders, there's sell stop orders, there's breakout orders, there's stop loss orders. There's so many orders sitting here. So we've already hit all the orders here, right? Now we're just remaining to hit these. So all the dips, in my opinion now, if the chart sets up, is going to be for a breakout over this high. Okay? Now most traders, this is why I say, why are you buying breakout? It annoys me why traders play breakouts. It annoys me. It's like there's so many stop loss orders here. This is like buying a breakout for a short, right? A short is buying a breakout. He got trapped right here. A short is buying the breakout. Imagine the same thing as a long bias trader buying a breakout. You buy the breakout, they hit all your stop losses, and you start to get dumped on. So everyone who's trading here is just losing money all the time. So if you recap your trades, you'll realize that most of your trades, or a lot of your trades, might actually be breakout trades, okay? So stop doing that. Look for dips. Look for market structure, what we just went over, inverse head and shoulders, okay? Now there's leftover liquidity right here. So we need to grab the liquidity. Either we continue to break out, okay? Or we grab liquidity over high of day, pull back, grab liquidity, and then pull back down, okay? These are two scenarios. We either dip and rip, grab liquidity, and keep going, or we dip down, right? Or we dip down and just keep flushing down. But overall, I think we need to grab liquidity. Now, this is not guaranteed, right? Nothing is guaranteed in the market. This is all just probabilities. And from what I have seen in the market, and what makes sense logically, is that we need to break this high day, right? So I'm going to be watching these dips. I'm going to be making sure that the level 2 is set up. It's not too early into open. I don't care if it's going to dip and rip into open. I might take 500 shares, 1,000 shares, just to be a part of it. But I'm not going to rush full position into open. I like to wait. Right? I like to be patient. I like to let those trades set up before actually putting on some risk on the table. because otherwise it's not A plus. We don't know we don't know all the backstory behind this, right? Because there's so much backstory. Just because there's a pop here, there's so much that goes into this. Algorithms, stop losses. Like most traders didn't even know there's people getting stopped out here, right? So make sure you guys are understanding this. Let's move on to the next stock. And meanwhile, make sure you guys drop a follow and make sure you guys drop a like on the stream. If you guys are new, make sure you guys subscribe. There's a lot of new videos coming out soon. Hope you guys are learning something along the way. So AGBA. All right, AGBA, we're looking at a nice trade setup here. Now our team killed this already in pre-market. They were on it from 140s. We had a price target up to 160s, and that's what our team traded right now. Now what's the next setup here? I'm looking at 1.5 support for an entry. Right? I wrote out my pre-market plan. I like to keep it old school on a piece of paper, right? Wrote out a pre-market plan, not an exact pre-market plan, but I just said AGBA I'm watching at 1.5, NKGN I'm watching for dips. We'll go over NKGN as well, but I like to have it on a piece of paper so that the next later in the day, after the day is done, I can go see if I followed my plan and I can see how I reacted, in real time. So always growing as a trader, right? So 1.5, like I said, we're looking for where our sellers trapped and where our buyers are trapped. Simple strategy. All right, so obviously big supply zone here. Big supply zone, right? We have a massive move down. So we're going to mark out this level, okay? We have a big supply zone here at this candle close or candle open. We're going to mark out this 1.5. If we go back to previous days, we can see that we have the same 157, right, as a big supply zone. And then we have 166 as this top wick. Now this 157 aligns, right? We have a massive supply. We also align with the next day's supply, okay? So 157 is obviously clear resistance, okay? Now let's see what's happening at 157. So far, we're rejecting, but it's not as big, right? Last time we rejected 157, boom, come down. 157, boom, come down. Today, not such a heavy rejection, right? Not such a heavy rejection. So we're looking for either 143, right, or 150 to hold. Either one of these to break out of 157 eventually. I would prefer 143 because that's the lowest supply. We haven't really grabbed liquidity here since this initial open. So I think if we can either make, right, so looking for a pullback into 143 would basically be an equal low setup, right? So we break out of structure. We have a high here. We break out of structure, right? Now we look for an equal low at this level. Either a higher low, so bouncing from 146 would be a higher low, okay? Either a higher low, so we bounce here, okay? Like downtrend breakout, either we bounce here, okay? Or we come down and make equal lows, grab liquidity, and make that move all the way back up. This is what I would prefer, right? What's more of an A plus setup? All right, let me ask you guys. What's more of an A plus setup? Either a higher low, right? I think both trades are good. Both trades are good, but what's higher quality for bigger move potential? Either a higher low, okay, and downtrend break, or we come down, trade number one, or we come down, grab stop losses like we saw in SPCB, and we go and, I'm not going to say where we target, but what do you think is better? Trade one or trade two? After hitting stop losses on trade two, what's better? Trade number one or trade number two? Which has a better risk to reward? Trade number two. There we go. So you guys understand. Now you guys understand, so you have to focus on taking these trade setups now. Now sometimes a trade setup will occur in the higher low, and which is continuation of the trend, right? Which is a great trade. So I'm not denying that a higher low is not a good trade. We can even hold this structure right here, right? But overall, bigger picture, we're looking for equal low setup, grab liquidity, right all the way back up. This is the trades that you look for to make big money on, right? These are still nice trades. Holding structure, higher low. Still good trades. Trades that you can hold to high day are these trades. Okay, does that make sense? So our plan. Hello. All right, am I back on stream? I think I froze out. My Wi-Fi might have tripped. Am I back on stream? All right, I'm back on. Awesome. I don't know why that happened, but anyway, NKGN final and last plan we're going over. All right, so NKGN we're looking at this demand zone. So where did I get this demand zone? I wrote down in my pre-market plan. Okay, let me read it. I said, looks like overcrowded with shorts, so maybe we squeeze. That's what I wrote down. Now, what does that mean? Overcrowded with shorts. We have big selling pressure. We grab liquidity right here on this wick. You guys can see that. Right, that whole wick right there. That big wick right there, we grab liquidity. Big push down. Right, with a lot of selling pressure volume. Another push into here. Boom, big sell down. So a lot of shorts, a lot of selling pressure volume. Eventually, right now we have not that much buying pressure. So if we start to reclaim and hold this weekly demand zone, this is from the weekly, okay? I drew out this area where buyers or sellers were at last time. Sorry, buyers were at last time. We're going to target into this next supply, 192. Okay? So if we hold this level and reclaim 150 on low buying pressure, that means after we start to break out, it's going to hit scanners. You have to think a little bit ahead, right? It's going to hit scanners. It's going to come on people scanners. All the breakout traders that we try to avoid, right? We don't take breakout trades here. We don't take like C+ setups. That's like a D- setup. All right, so we're looking for a downtrend break here, okay? A downtrend break on hold of this level, reclaim 1.5, right? So once we hold this level and to open, we'll maybe take a starter, add on to 1.5, and then once we break over this previous high, that's when it's going to hit scanners. Everyone's going to be starting to buy the breakout. And we're going to sell into everyone who's buying the breakouts, okay? We're going to sell into here. So we buy here, sell here. And let's just say SMFL hitting the scanner. Hold up, I got to check up on that one. That one had a reverse split today. And the float's going to be 100 or like 200K, so I have to check up on that. SMFL. Okay, yeah, 1-for-7 split. I can't even trade it on Webull right now. Can't even trade it. SMFL 100K float. Oh my gosh. After the split. That's insane. Dude, this is 1-7. The float, sorry to go off topic, but the float on SMFL before the split at 43 cents was 600 or 700K. They just did a 1-7 split, and it's nuts. That's why I wanted to check up on it, because I knew they had a split today. Anyway, but yeah, let's check up on this. This is the plan. We're looking for a consolidation here, reclaim 1.5, take entries on a good risk-reward trade. One thing to go over again, that taking trades into this area, 1.5, right? Oh, don't want that, right? 1.5, or let's just say right here, you're risking 1.3. Let's just say you risk below this low, even a candle close. You're risking for back up to high day, 6.6 R. So when you take a loss on one of these trades that have a high probability trade setup, you can take 6 of these trades to make up for one. So imagine you hit 2 of these. You just need one of these trades every 2-3 days, right? Every 2-3 days. That's why risk reward is so important, taking high quality setups. I can take 4 losses in a row and 1 win will completely just put me on top of all those losses. Plus I'll be good for the whole week, right? Because I added on to my winner, double down on my winners, right? That's what you hear pro traders do. And you're probably wondering like, well, I'm always averaging down. How do pro traders average up? Well, this is why, because they have good risk reward trades, okay? So this is our plan on NKGN. I'm about to hop on live trading and go through the rest of the watch list with my team. We have a 7-day free trial. Link is right here. or the top link in the description. You guys can tune in. All right, you guys tune in and come watch. Come trade live with me for free. We're about to catch some bangers. I'm about to be on live on Wednesday, right? So make sure you guys are subscribed and have post notifications on so you guys can realize, so you guys can, actually see when I'm live. And I have so many YouTube videos coming out, right? I just uploaded a supply and demand YouTube video 2 days ago. Make sure you guys watch that. The secret at catching big trades. I posted that yesterday. I posted a Visa full how I caught the squeeze on Twitter. And if you guys want a YouTube video on that, let me know in the comments in the previous videos so I can kind of get an understanding on what you guys want. But make sure you guys subscribe, drop a like on the stream, tune in on Wednesday, and check out the free Discord link. 7-day free trial. Come trade with me right now. Other than that, it's been Minnie. Peace out.